Look at Casper, Microsoft again, down $2. Got it. Look at Casper. I'm told they're a kind of a millennial online mattress company. They reported their earnings earlier. Okay, revenue skyrocketed 16%, and they're losing less cash from the pandemic. But look at the stock, it's down 9%. Gregg Smith is with us, and he is an early investor in Casper. Bearing in mind that the stock is down nearly 10% right now, tell me why you are hot on a mattress company.
Hey, good morning, Stuart. Well, look, sleep is the foundation of health, and we've been sleeping the same way for centuries, and the technology has not really evolved. With that being said, I actually was very underwhelmed by Casper's numbers that they reported this morning, and I was actually very disappointed. We just finished, or are in the middle of the greatest online shopping party the world has ever seen. We've had a massive home improvement spend by consumers at home. We're now, you could argue, in a car buying bubble. And I think the sweatpants stage is next as people are grappling with their changing waistlines. And if you look at all the money spent online, Casper reported this morning a modest 5% increase in online sales, which to me is completely underwhelming. It's almost like the party happened everywhere else and they didn't get invited to the dance.
But I'm told that they're going into, well, no, we've got the CEO later on the show, but I'm told that they're now going into some bricks and mortar operations. Why?
Well, I think that's right. I think they currently have 57 stores open. I think they're looking at a multi-channel strategy, realizing that the consumer wants a different way of shopping for a mattress as opposed to just buying it online. But again, this is a direct-to-consumer company at the end of the day. I am an investor in several other private mattress companies, and I've seen other private mattress companies growing at much, much faster rates than Casper. I think they're grappling with a overhead and expense base that is much larger than they should have. And again, I'm disappointed with the lack of growth that they reported for their online sales, especially in an environment where we've seen other direct-to-consumer companies that are growing much faster, and you're seeing ad rates, particularly like Facebook ad rates, falling.
Look, before we move on, I just got to ask you this. Are you still a shareholder of Casper?
I am still a shareholder at Casper. The lockup came up on August 4th, just a week ago, for my investment from pre-IPO, but I'm very cautious on the outlook given that the disappointing growth in the online numbers that they reported this morning.
Give me a brief report, please, on Wayfair. Tell me if you own it, and tell me what you think of its prospects in the future.
Look, I don't own Wayfair, but look, all you have to do is look around. We know what's happening online. People are sitting at home, they're buying, they're upgrading their homes. Again, I talked about this massive home improvement as evidenced by Wayfair stock. You can look at companies like Carvana in terms of what's happening in the car buying, what I might call a bubble. And, why did Casper not participate in that? People are shopping online. We're all sitting at home spending more and more money, whether it's on home improvement or pets, and even going online and buying cars. So that space is highly competitive. But, Casper needs to get to a point where they can prove that this model can be profitable and they can show much larger increases in online sales, I believe.
Gotcha. Gregg Smith, thanks for being with us again today. We always appreciate it. Next case.
Thank you.